It has now been 25 years since Hong Kong came home to the embrace of its motherland. Since Hong Kong's return home in 1997, a roaring Chinese mainland economy provided countless opportunities for Hong Kong's development and businesses based in the city, either local or from overseas. With strong support from the central government of China and the determination of the Hong Kong Special Administrative Region government and the Hong Kong people, the city has prospered under the one country, two systems principle.
Hong Kong's economic output and per capita GDP more than doubled in the past 2.5 decades. The contribution to GDP from Hong Kong's critical financial sector also more than doubled during that time.
Since 1997, Hong Kong's stock market capitalization jumped by nearly 12 times.
I think for IPOs, traditionally that has been Hong Kong's strength. I think Hong Kong will continue to serve as an important center for fundraising, especially for IPOs. In my work, I do try to work with the government, with the exchange, and with regulators to get a more diverse base, whether it's IPOs and then also the trading afterwards, and to have a more as mentioned before, across asset classes to have a more diversified development.
And the city's foreign exchange reserves surged from just over 90 billion US dollars in 1997 to over 465 billion US dollars today. Hong Kong is a super connector of capital between East and West.
In fact, Hong Kong has been growing its unit capacity in the past years. The four important connects: the Stock Connect launched in 2014, the Bond Connect in 2017, the Wealth Connect in 2021, and most recently, the ETF Connect, are important milestones in the financial market. With increasingly strong infrastructure, Hong Kong is one of the most important gateways for global investors to gain access to the thematic growth opportunities offered by the mainland and the region. Hong Kong is also one of the most important stages for the mainland companies to showcase in the global financial markets. We do believe in the future, Hong Kong will continue to grow as a regional and global superconnector of capital, and Hong Kong's growth as a superconnector will contribute to the overall growth of the region.
The future of Hong Kong as a leading international financial center will be based on two enormous trends that will guarantee the city's ability to compete in the top echelon of global finance. The first being a top fundraising destination for Chinese mainland companies, and the second being an unparalleled beneficiary of the Chinese mainland's continued growth and its capital market reforms.
The ascent of the Chinese mainland economy since reform and opening up in the past 4 decades plus has been a driving force in the growth of Hong Kong's financial sector and the city's ability to remain and shine as a leader in global finance.
That's because at the end of last year, Hong Kong attracted some 1,370 Chinese mainland companies to list and raise funds in the city. That's compared with just over 100 mainland companies listed in Hong Kong at the end of 1997.
Mainland companies now account for around 80% of Hong Kong's total stock market capitalization. That's led to trading volumes at Hong Kong Exchange and Clearing hitting a record in 2021, and vaulting over 11 times compared to 1997. Edmund Lau, the Deputy Chief Executive of the Hong Kong Monetary Authority, has said that the development of the mainland's capital markets presents huge opportunities for Hong Kong's financial sector. One opportunity that has turned into reality is the highly successful mutual market access schemes between the mainland and Hong Kong, namely the Stock Connect, Bond Connect, Wealth Management Connect, and soon-to-be-launched ETF Connect. These schemes offer a more direct and convenient link for international and mainland investors to access each other's capital markets via Hong Kong.
I think that will continue to be the trend, the mutual access of various markets, as you mentioned, I think across different asset classes. So first with Stock Connect, with Bond Connect, mutual fund recognition. Certainly that will continue to be the trend. I think they're most recently announced with ETFs, exchange traded funds. So I do look forward to this trend continuing along the lines of other asset classes, perhaps commodities, and widening the product offering for investors to tap into the markets.
Since the inaugural Stock Connect program was launched between Hong Kong and Shanghai in 2014, trading has boomed. Despite the pandemic and storm clouds of economic uncertainty, the Stock Connect scheme scaled new heights in 2021 with strong two-way capital flows leading to record annual turnover. But it wasn't just a strong performance for the Stock Connect scheme. 2021 was also a bumper year for the Bond Connect program. Since its launch in 2017, the annual daily turnover of the northbound Bond Connect, or overseas investors investing in the China interbank bond market, has hit record highs every year.
Hong Kong traditionally is viewed as an equity hub, as a financial center, but Hong Kong also developed a very strong bond market. If we look at the total issuance data, in the last year, Hong Kong issued about $400 billion US dollar. It's ranked number 3 in total in the Asia ex-Japan market, just after China and South Korea. And apart from the US dollar bond market, Hong Kong still has a very strong dim sum bond market. Because according to the National 14th Five-Year Plan, Hong Kong is deemed to be the global renminbi offshore business hub. So dim sum bond definitely is one of the most important financial products. So last year, the growth rate of the dim sum bond issuance is about 35%, and the total issuance size is about 550 billion yuan.
And as the Chinese mainland continues to prosper, the opportunities presented to Hong Kong's asset management, private banking, and wealth management services will be massive.
Hong Kong is a leading international asset management center. Assets under management in Hong Kong have swelled some 22.5 times today compared to the beginning of the millennium. The Wealth Management Connect pilot scheme, being trialed and further developed in the Guangdong, Hong Kong, Macau Greater Bay Area, offers Hong Kong's financial services and asset management industry unique access to an area with a population greater than Germany, growing in affluence, and with an economic output on par with the top 10 global economy.
The GBA economy, the size is large, and the growth rate is very strong. The launch of the Wealth Connect is clearly another milestone. At this moment, the Wealth Connect is running with a quota of RMB 150 billion. Learning from the experience of the successful Stock Connect and also Bond Connect, we do believe this quota will be lifted up in the future. And our estimates suggest that the total southbound AUM of the Wealth Connect can reach between 700 billion and 1.5 trillion by 2030. Looking ahead, we do believe the Wealth Connect will continue to support Hong Kong's financial sector growth, therefore support Hong Kong's overall GDP growth and the region and the GBA's economic growth.
Synergies in the Greater Bay Area will add further momentum to support the scaling up of Hong Kong's dynamic fintech industry. The fintech industry, of course, another key growth engine to enhance Hong Kong's status as a leader of the financial world of tomorrow.
I'm quite positive in Hong Kong's development of the fintech because Hong Kong is actually quite advanced in that area. The main reason is that Hong Kong's financial market is very strong. We have a lot of the VCs, so the total size of the VC market here is about Hong Kong dollar 10 billion. So with the support of the VC companies, the Hong Kong can the fintech startups can be well supported by the market.
The large number of financial institutions in Hong Kong and the city's innovation drive provides the depth and vision for a thriving fintech ecosystem. The city is already home to over 600 fintech companies and 5 fintech unicorns. One of the top considerations for fintech companies to set up shop in Hong Kong is access to the Chinese mainland market, which leads the world in consumer fintech adoption.
One more future of finance element that Hong Kong is aiming to capture: green finance. China's international financial center aims to lead as a global, high-quality, voluntary carbon market.
Hong Kong is also growing as a green finance hub. Hong Kong SAR government has successfully issued RMB-denominated green bond. Hong Kong markets have also helped the neighboring city Shenzhen issuing 3.9 billion RMB-denominated green bond. Green finance is an important future growth thesis. Hong Kong can certainly drive RMB internationalization together with the development as a green finance hub. So looking ahead, we do see Hong Kong continue to play an instrumental role in driving RMB internationalization ahead.
Meanwhile, the SAR government's inaugural retail green bond this year was 1.2 times oversubscribed. The demand for green finance in Hong Kong is clearly there. But as with other huge future opportunities for Hong Kong, the future of green finance in the city will be closely linked with the Chinese mainland's carbon neutrality goals. The CEO of Hong Kong Exchanges and Clearing, Nicholas Aguzin, says Hong Kong is well placed to support the growing global demand for capital participation in the mainland's low-carbon transition.